Welcome to BizWire. I'm Joseph Nordstrom in Beijing. For a few years now, pundits have been predicting the end of cheap China, with the country losing its competitive edge as a low-cost manufacturing base, with companies relocating to cheaper locales like Southeast Asia and now Mexico. Beijing wants to shift to higher value production and to see incomes continue to rise, which is giving places like Vietnam, whose wages are significantly lower, a leg up in labor-intensive industries. China remains the world's largest exporter of low-end goods, but has recently started to lose share in key markets such as textiles. Gareth Leather, an economist at Capital Economics, said while many countries can now compete with China on labor costs, it is countries elsewhere in Asia who are able to take advantage of strong infrastructure and existing supply chain networks that will be the main beneficiaries of China's move out of low-end manufacturing. But the transition away from manufacturing puts pressure on leaders to make sure jobs are created in other sectors, something akin to teaching an old dog new tricks in order to keep the world's #2 economy chugging along. Earlier this week in Economic Insight, we discussed China's aging population and its shrinking pool of labor, which last year lost 3.5 million workers, a trend which will continue to worsen, which is helping to push up wages as firms struggle to find enough workers. According to data compiled by Bloomberg, China's pool of 15 to 39-year-olds, which supplies the bulk of workers for industry, construction, and services, fell by 32 million over the past 5 years to 525 million last year. Economists say there is a long-term trend of rising wages and other costs that have made China a less attractive place, especially for basic manufacturing. For example, labor costs in Mexico were roughly 200% higher than China's a decade ago, but wages have stagnated in Mexico, and so the gap has narrowed to nearly zero today, and some say manufacturing wages in Mexico are now 20% less than in China. Combined with lower shipping costs and import taxes to America, Mexico is becoming very competitive again in manufacturing. While stagnant wages are not good for workers individually, the trend is at least being credited with reviving industry in Mexico, which was hit hard by China's entry into the World Trade Organization in 2001. The macroeconomic view looks positive to international investors who have been pouring money into Mexico, where the stock market hit a record high earlier this year, but conditions on the ground are less sunny, as more than half of Mexico's 113 million people live below the poverty line. As the pendulum changes direction and China tries to move up the value chain, both countries should see some benefit, though labor productivity will have to rise in Mexico to really put a dent in its poverty rates. As any economist will tell you, productivity gains are the only long-term way to boost standards of living, and gains in China have been impressive, even if they've been cooling off more recently. China's labor productivity has grown quickly, even as it still remains less than 10% of the level in Singapore and the United States, and about 20% of South Korea's. Hamid El-Sharif, the Asian Development Bank's country director for China, underscored this point by saying that unless compensated by rising labor productivity, high wages would erode the economy's competitiveness and growth potential, hampering the government's grand development plans. The Asian Development Bank said that to prevent further harm to competitiveness, China must ensure that increases in minimum wages don't outpace gains in productivity, which should be fostered through incentives for companies to invest in new technologies. Simon Benjamin, a partner with Ernst & Young Advisory Services, said the labor shortage is not yet a major problem in China, as there are still measures the government can take to free up the pool of 320 million rural laborers, such as the further easing of the hukou or household registration system. We've discussed hukou reform many times here in Economic Insight, as this is one of, if not the key issue facing China's leaders as it hopes to build what it calls a moderately prosperous society by 2020. Well, this is BizWire on the Blue Ocean Network. Stay tuned for more economic insight.